This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody. Streaming across Bloomberg platforms. That means TV, radio, YouTube, and Bloomberg Originals. I'm Carol Masser along with Tim Stenivek on a day where, once again, a big drop, a big bank earnings. Not so happy, at least when it comes to investor reaction.
Yeah, Wells Fargo, Bank of America, and Citigroup are all down today. Just a little preview of some of my decliners a little later in the show. We're going to be talking about big bank earnings and the different messages that we're hearing from the banks, and also where the similarities are with what they're saying to investors and potentially to this administration.
And I think what's kind of interesting is we've got a Bloomberg Big Takeout. It's a must read. It's on the terminal. We're going to get into the CEO playbook to navigating President Trump. We're going to get our own take with Michael Townsend. He's Managing Director of Legislative and Regulatory Affairs over at Charles Schwab. He kind of connects the dots between Wall Street, Main Street, Washington, and so much more. So looking forward to whether it's the president's tariffs, whether it's other initiatives coming from the White House. There's a lot going on that is keeping American CEOs pretty busy in trying to figure it out.
Well, speaking of those tariffs, we were expecting maybe we would hear from the Supreme Court on a ruling on those IEEPA tariffs. We didn't hear that. We don't know when we would hear again from the Supreme Court.
Three times the charm, maybe?
Maybe third time's the charm, yeah. Last week was the first day we thought we'd hear. Today was the second day. So we'll see. All
right, so we're going to get into that. We're also looking into the Trump economy, how it is going. Got some economic news today. The folks over at LinkedIn have some interesting posts about AI and what it means for the job market. And then how about a little bit of women's sports?
Carolyn Tisch Blodgett is joining us, the CEO and founder of Next3, talking all about what she's been up to. A lot of different sports she's focused on.
Tisch family, Mara family, Giants.
A lot of them in the Bloomberg terminal, it turns out.
There are. Do not go anywhere. Lots coming your way in the next 60 minutes. First up, let's get a check on the trading session. We see some stocks under pressure. Here is Charlie Pellet.
Thank you very much indeed. Do want to bring you up to date on geopolitical developments, specifically the U.S. and Greenland. Just getting a red headline on the Bloomberg right now. Denmark says it has agreed with the U.S. to form a working group on Greenland. News conference underway right now. We'll bring you headlines as they become available. But right now, the headline on the Bloomberg, Denmark says it has agreed with the United States to form a working group on Greenland. Stocks lower across the board right now. We are on track for another losing day. If that does happen, it'll be the first back-to-back declines of the new year. The Dow, the S&P, NASDAQ, all in the red, looking at potentially a second day of losses on the S&P. We have bounced off the bottom right now. 58-point drop on the S&P, down 0.8%, just above 6,900, 6,905 on the S&P. The Dow down 157, also off session lows, down 0.3%. NASDAQ Composite Index particularly hard hit today, down 1.4%. NASDAQ 100 Index down 1.5%, while the Russell 2000 Index of small cap shares trading higher by 0.2%. The 10-year at 4.13%, with the 2-year 3.51%. Gold is surging 1.2%, 46.41 the ounce. Are you watching silver? Up now by 6.7%. Spot silver with a $92 handle, trading at a record. Silver, $92.74 right now. And West Texas Intermediate crude up 1.2%, $61.89. But that silver quote bears repeating, $92.68 for an ounce of silver. Bank stocks lower across the board. We'll be exploring more about the banks, as well as previewing Goldman and Morgan Stanley tomorrow. Goldman Sachs right now down 0.4%. Morgan Stanley down 1.4%. But right now, Citigroup after earnings down 4%. Wells Fargo after earnings down 5%. And Bank of America down 4.1%. JP Morgan out yesterday. That stock down today by another 0.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, as you know by now, the U.S. Supreme Court did not rule on challenges to President Trump's tariffs for a second time, Tim was mentioning, and we'll see if third time's the charm. That happened earlier today, leaving the world to wait until at least next week to learn the fate of his signature economic policy. This is a big one, Tim.
Yeah, meantime, research by Morgan Stanley's Matt Hornbach caught the attention of our team. A big shout out to Natalia on our team for bringing this to our attention, noting that there may be room for nuance when the Supreme Court does finally rule.
All right, so let's get into it. Matt is Managing Director, Global Head of Macro Strategy over at Morgan Stanley. He joins us here in studio. Great to have you here. Welcome, welcome. The Supreme Court, so we're still waiting. You've got some research out. I mean, to be real, there could be one extreme. They could fully repeal it, right? Or they could fully back the president's IEEPA tariffs. How likely, though, in your view, before we get into the nuances, how likely is it to be one of those extremes, Matt?
I think it's less likely than the middle gray area where there could be room for nuance. These are complicated matters, and there are lots of different opinions that are likely being held by different members of the Supreme Court. So we do think that the sort of black and white scenarios are less likely than that middle ground gray area, where we do think that there's room for differences of opinion to come through in the final opinion whenever it gets released.
When the president was in Detroit at the Economic Club yesterday, he said, we should win on tariff Supreme Court case. He said that. And he said, we'll figure something out if we don't win the tariff case. Is he right to think that he will win it?
Well, I think the president is right to think whatever he would like to think. In the end, it depends on the group of individuals who are tasked with setting the law of the land. So I don't know if he's right or if he's not right. The Supreme Court will tell us one way or the other.
So when we do hear from the Supreme Court, let's say it doesn't go directly in the president's favor, he said we'll figure something out if we don't win the tariff case. What's a likely scenario for his team to figure out how it can legally implement or keep these tariffs should the IEEPA tariffs be ruled unconstitutional?
Absolutely. Well, I mean, I think the first thing to note is that there are already bilateral agreements that are sort of working their way through the system. Some of them have been finalized in as far as we think they might be finalized. Others are probably still in a period of back and forth. But the president does have the ability to do bilateral deals with countries, number one. Number two, he has other authorities that are at his disposal to take some of the emergency tariffs that he put in place and kind of repackage them under these different authorities. So, for example, Section 232, Section 301, right? These are numbers that many people may not be familiar with, but starting in 2016,
they are now.
Very quickly became aware of these different authorities that the president has to implement tariffs. So I think he's got some of those authorities. There's a Section 122, which allows the president to put up to a 15% tariff on countries for a limited period of time. So there are definitely things that he could do.
We didn't hear anything about Congress and using the powers of Congress to do this.
That's what I think is interesting. And we want to get into what you see as there are more nuances in terms of how this plays out. But you do wonder about the precedent that's set by this ultimate Supreme Court ruling about what this means going forward and the role that Congress has historically and is supposed to be playing when it comes to levying tariffs.
Absolutely. And I think this is one of the possibilities that the Supreme Court could lay out is they could lay out some kind of a time frame for the administration to get the approval of Congress in order to keep the emergency tariffs in place. So this is what we mean by nuance, is that there's lots of different ways this could play out. And one of the ways is that the Supreme Court could encourage the administration to gain the approval of the Congress in order to keep the tariffs in place for an extended period of time.
Go back to checks and balances, perhaps, right? Like that would be the message. You did share with our producer, Talia, a note about these in-between scenarios, and I just want to pull out some of it. It said, these are your words, should the Supreme Court overturn the IEEPA tariffs, we think the two main considerations for investors with respect to the U.S. Treasury's financing needs are the magnitude and timing of when refunds would begin. We think the impact to Treasury issuance will be limited to bills. Limited refund scenario, likely no meaningful changes to bill issuance. Partial refund scenario, the Treasury likely makes a small increase to regular bill auction sizes. Fast scenario, the Treasury likely issues a few ad hoc cash management bills. So in other words, they're going to have to come up with some money.
So very possibly, yes, they may have to come up with some money. I think earlier this week there was a Truth Social post by the president relating to the issue of refunds, and the president made it, I think, clear that it's not going to be so easy to figure out who exactly is owed refunds and on what time frame they're going to be paid those refunds. And so I think from our perspective, even if the Supreme Court makes it clear that refunds will need to be paid at some point, the administration may have a lot of leeway to pay the refunds on their particular timeline. And so for the US Treasury, who will ultimately have to push the button and send the funds, exactly when they need to raise the funds in order to send them through the wires is going to be very unclear. And when they do decide they need to get the money, they may pre-fund the Treasury General account by issuing some Treasury bills. I think that's very, very normal, and the bill market can certainly handle that.
Could it be inflationary?
Could the refunds be inflationary? Well, from the perspective of our economics team, the refunds that we might be talking about...
We're putting a lot of carts before a lot of horses here,
That's exactly right. But even if we take the extreme scenario of the refunds getting paid on a reasonable time frame, our economists don't expect it will subtract that much from inflation because of the tariff rates would be coming down. And they also don't expect that it would add that much to real GDP.
Because I'm just thinking stimulus checks. When I hear a refund check come in the form of tariffs, I'm thinking what happened with stimulus checks during the COVID pandemic.
Well, we have to also bear in mind that these refunds are very likely mostly will be paid to companies. And not necessarily to households.
And maybe just helps out those companies who've been dealing with higher costs. Hey, one last question. Are there any in-between scenarios when it comes to an independent Fed under President Trump, in your view?
Well, I think there's lots of considerations here, Carol. And when we think about the independence of the Fed, the first thing we need to understand is that we're talking about a committee of individuals. And so in order to gain overriding control on this committee, you'll need more than just the chair of the Federal Reserve. Number two, whoever ends up being the next chair of the Federal Reserve, when they make a decision on policy, they're going to have to explain it to the investing public and to the public at large in a way that's credible. And if that explanation does not strike people as credible, then financial markets will extract a price.
So the market is kind of the checks and balances.
Absolutely.
On any Fed. I'm reading 1929 by Aaron or Sorkin, and it's Andrew, sorry. And it's just interesting, like you think about the pressure on the Fed back then during the panic, and you're just thinking about the pressure here. It's different, but you just whether, what this would mean for the financial markets going forward.
That's right. I think kind of related to this, what is really important is that whoever is in charge of the Fed and whatever the committee ends up looking like, that they get the best quality data from our statistical agencies, the Bureau of Labor Statistics, the Bureau of Economic Analysis, that they possibly can get. And one of the things that has happened since the government shutdown in October is that the quality of the data has deteriorated. The response rates to the labor market report have plummeted. It's really important that whoever is in the Fed, at the Fed, they get the best quality data that they can get to make the best decisions for the American people they can.
Come back soon. Love to continue this. Matt Hornbach, he's Managing Director, Global Head of Macro Strategy over at Morgan Stanley. Well, the president's tariffs, certainly on executive minds around the U.S. and around the globe. So too, Tim, is the economic backdrop. We got some data today.
Yeah, retail sales rose in November by the most since July, fueled by a rebound in auto purchases and resilient holiday shopping. Wholesale inflation in the U.S. picked up slightly in November from a month earlier on a jump on energy costs. Also, U.S. previously owned home sales climbed in December to the fastest pace since 2023, a welcome sign for a housing market that has lacked momentum for a couple of years.
So that's what's going on. So we wanted to take a deeper dive into the U.S. economic picture based on some of this, and especially when it comes to the labor market. With us is Karin Kimbrough. She is Chief Economist over at LinkedIn. She joins us from Sunnyvale, California. Karin, good to be checking in with you. We keep getting data on the U.S. economy, some old, some more current. Compare that with what the data you guys get on the LinkedIn platform, especially when it shows the U.S. labor market. Does it all kind of tell the same U.S. economic story in your view?
Our data at LinkedIn definitely reflects the publicly available data, although our data typically comes out in real time, and I would say at least sometimes even in advance of the releases. So, for example, we are seeing a lot of hiring data, a lot of quits related data, and a lot of data about job transitions. That just tells us about the health of the labor market. And what we're seeing right now, honestly, is a labor market that's holding on. As you just mentioned and your previous speaker mentioned, it's been a couple of years of low momentum for the economy. And but we're seeing hiring actually in the last month picked up 6%. So on the month, we saw a little 6% bump in hiring, which meant employers are back out there looking for talent. We think that could continue. But by and large, it has been a sluggish labor market, and a lot of that, in our opinion, had to do with the really big run-up in interest rates that we saw back in 2022 and 2023. You know, the 500 plus basis points in a year and a quarter really kind of hit the brakes for employers.
So, you know, we last spoke to you a little over a month ago, and I'll ask the question that I try to ask you each and every time you join us, which is the labor market better than it was when you were last on our program now, or is it worse?
You know what? I actually think it's probably a little bit the same, maybe slightly better. And better because hiring has accelerated a little bit in the last month for us. But to the point where I said it's kind of the same, hiring is still running 20% slower than it was in our pre-pandemic era. So hiring overall across all industries is pretty slow. There are a few pockets of growth, and you look at education and healthcare, of course, is the star. Technology is improving, believe it, they're hiring more. But by and large, we're in this transition period where the labor market has been a little bit suppressed, where employers just aren't hiring as much and workers are kind of staying put. So it's a little bit better, but let me leave you with one thought here. It's still really competitive for job seekers. So on our platform at LinkedIn, what we're seeing is twice as many applicants per open role as, say, 3 or 4 years ago. And so there's a lot more people looking at the same jobs trying to get one of them.
So does that just mean the jobs where there is growth, I mean, there are okay, so there, okay.
What does it mean?
Yeah, what does it mean? Like, I'm trying to figure it out. Like, so is it that there are a lot of jobs out there, but for the ones that there are most workers for, there's fewer spots?
What it means to me, the way I read it, is that AI is starting to have an effect on the labor market. I do believe that most of what we've seen in terms of that sluggishness in hiring, the fact that the non-farm payroll numbers are low, has a lot to do with the classic like supply and demand factors. But AI is starting to have its effect. And we're seeing it in some new roles that are being created. But those roles are looking for very specific skills, and not all workers across the economy have those skills yet. So here's some of the new roles that we're seeing that are popping up. So for example, 1.3 million new roles related to AI, whether you are building AI tools, whether you are integrating them into business processes, whether you're trying to explain it to people and be a storyteller of sorts. There's 1.3 million more roles looking for AI literacy skills, AI technology.
Karin, I want to jump in. That's great for somebody who's like 20 years old and has time to learn how to do those things. But for somebody who's, mid or late career, just very briefly in a minute, how do you make that pivot?
Yeah, well, one of the things is you need to think about the skills, right? So a lot of people are kind of striking out on their own, and they're becoming founders where they are basically entering the gig economy or doing their own thing, where they can really lean into the one skill that they really have that's a special advantage. We're seeing a lot more people get into content creation. There are 4 million people on our platform right now doing content creation. And we're seeing a lot of Gen Z folks who are saying, you know what, the trades actually might be preferable for me as a career path.
Wow.
6 out of 10 of them say they're thinking the trades look really meaningful as a career path.
Sounds like people are listening, right, to certainly the trends and demands that are out there.
Trades or influencer? Those are your choices.
Which one would you do?
Trades.
Why not both?
I could see you being a good plumber.
I think that's probably way less exhausting than being an influencer.
Yeah, I think so too.
Plumbing pays well.
Exactly.
Karin, great stuff. Karin Kimbrough, Chief Economist over at LinkedIn. Be well. Talk soon. Coming up next, CEO Playbook to Navigating President Trump, something we're going to talk about a lot today with Schwab's political analyst Mike Townsend stopping by. That's next.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg, just getting headlines from the Fed's latest Beige Book survey of economic conditions. The Beige Book says economic activity was up at a slight to modest pace. Federal Reserve also says the outlooks for future activity, quote, mildly optimistic, and employment mostly unchanged across Fed districts. Fed Beige Book, by the way, gets its name from the cover of the book. Formal name, Summary of Commentary on Current Economic Conditions. The Dow, the S&P, NASDAQ all lower. Bottom line here, bank stocks dragging us down. We are off session lows. The S&P 500 index down 58 at 69.05. Second day of declines. If that does happen, it'll be the first time this young year that we've had 2 down days in a row on the S&P back-to-back. S&P down 0.8% again. The Dow down 0.3. NASDAQ Composite Index down 1.4%. NASDAQ 100 Index down 1.5%. And the Russell 2000 Index of small cap shares up 0.3%. 10-year at 4.13%, but the 2-year 3.50%. Gold is up 1.1% at $46.37 the ounce. But the big news, the surge in silver, up almost 7% right now, up 6.8%. An ounce of silver closing in on $93, $92.95 right now for an ounce of silver. Bitcoin up 3.3%, 97,229 on Bitcoin. Some of the other economic news out today, retail sales up in November by the most since July. Mixed picture for a lot of retailers. Macy's shares down now by 2.5%. Target shares, they're up by 1.1%. Walmart down 0.6%. And Amazon right now down by 2%. So again, recapping, stocks lower, S&P down 0.8%. Silver right now up 6.8%, $92.89 the ounce. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. As we've been reporting, one of the big stories today, and it's kind of because it's been delayed again, the U.S. Supreme Court did not rule on challenges to President Trump's tariffs. That was for a second time. So we maybe have to wait until next week to learn the fate of his signature economic policy, which, again, continues to create uncertainty for global CEOs, certainly American CEOs. It's also one of the many things out of the White House that our next guest needs to make sense of. I'm sure he's called on a lot when it comes to all things out of Pennsylvania Avenue. So great to be talking once again, Tim, with Mike Townsend.
He's managing director of legislative and regulatory affairs for Charles Schwab. He's a political analyst based in Washington. He's also the host of Schwab's Washington Wise podcast. He did some time on the Hill earlier in his career as well. Mike, good to see you again. Thanks for joining us. We're only a few days into the new year, and already we're talking about Venezuela. We're talking about companies in the U.S. and the president wanting to get that oil out of Venezuela. There's the pushback from the president and the Department of Justice on Fed Chair Jay Powell and the Federal Reserve. A busy few days to start the year?
Yeah, absolutely. Great to see you, Carolyn, Tim. And I feel like it's been 2 months worth of news in the first 2 weeks of the new year. So definitely trying to keep track of it all. As you talked about at the top of the show, a little bit of a surprise, I think, that the Supreme Court did not rule on the Trump tariffs. That's something that now it's almost like a parlor game here in town. Is it going to be today? Is it going to be today? So I guess we're going to wait until next week and see where that heads.
I mean, is the president creating a good or bad environment for American business? Like, what is it that you keep hearing?
Yeah, I think that the hard thing with this president, and I'm not saying this flippantly, but he just says a lot of stuff over the course of any one day, whether that's in speeches where he goes off script or in impromptu news conferences or over social media. There's just a lot to absorb every day, and I think companies are doing a better job. CEOs are doing a better job at maybe not reacting to every little thing, and trying to find where are the places we can work with the administration, to work with the White House, and not sort of overreact to every single pronouncement that comes out, because not every single pronouncement that comes out sort of amounts to anything. So I think that's the trick that is, people are getting better at navigating that.
Well, certainly not apples to apples, but I feel like we're doing the same thing. I mean, there's a lot that comes at us, and I think we're really tasked with trying to determine what really matters to investors longer term. So when it comes to things like capping credit card fees or Venezuela and having oil industry execs there and, talking about investing and recreating and rebuilding the infrastructure in Venezuela, I could just go kind of on and on the tariffs. How do you figure out, with all of that's dumped on us on a daily basis, what really matters, what we should be focusing on? Maybe it's not the shiny thing, but maybe it's something much more substantial. What are the substantial things that you think corporate CEOs should be keeping an eye on when it comes to this White House?
Well, look, I don't think there's any question that the markets are very, very interested in the Fed independence issue and the situation with Fed Chair Jerome Powell. But even larger than that, obviously, we have a successor to Powell coming up, and potentially other changes to the board. Stephen Myron's term, which is very abbreviated, his term ends at the end of January. So we'll have to see whether he stays on or whether the president appoints someone else to that. But I think the question of Fed independence is absolutely critical for the markets. You've seen what happened over the last few days, maybe kind of come back to the White House and not the way they expected. A lot of pushback from a lot of different people, both
Mike,
here in
do
the
you
US
think
and internationally.
When the president consistently criticizes Fed Chair Jay Powell, that's just bark, or do you think there's bite to it in terms of what he wants in a Fed chair and what he's going to present in a Fed chair?
Yeah, I think he's frustrated. There's no question he's frustrated that he thinks rates should be lower and that he thinks Jay Powell is sort of the driver of that. And I think we're going to get a successor chair from whoever he chooses out of the kind of 4 finalists, it appears, that we have. I think we'll get someone who is probably at least more interested in doing what the president wants in terms of rates. But I think the thing to remember is that this is a 12-member committee that votes, and the chair is just one vote. So I don't think that putting in a chair that maybe is a little bit of a different mindset than Powell is necessarily going to mean rates are going to go down all of a sudden. So I think that's the important thing to keep in mind, that it is a committee that's going to make a group decision based on the data, and I don't expect dramatic changes no matter who he chooses as chair.
But there are certain things that have to happen between now and then, Mike, and that includes, at least according to Senator Tom Tillis of North Carolina, Republican, the president backing off and the DOJ backing off its legal threats against Fed Chair Jay Powell. Senator Lisa Murkowski supports Senator Tom Tillis' decision to vote against any nominees to the Fed in the Senate Banking Committee in response to that DOJ probe into Jay Powell. So we have to see movement there, it sounds like, before we even see movement for the next Fed chair.
Well, and I think that's right. I think you have to keep in mind, and sometimes I think the president forgets this, but that Congress has a role to play in a lot of these issues. And I think for example, on another issue, the capping of credit card interest rates, you've seen some pretty high level of skepticism on Capitol Hill. And of course, it's Capitol Hill that will ultimately have to decide how to proceed on that. So I think the Fed chair is another place where whoever he nominates has to go through the Senate Banking Committee, has to get a vote by the full Senate, and they have some ability to hold that up, as Tillis talked about and as others have talked about. So we'll see where the investigation goes. But I venture to say that this has not played out in the way that the White House maybe anticipated it would, and wouldn't be surprised if we saw maybe a little bit of a backing down at some point we heard in the near future.
Yeah, we heard the word backfire quite a bit over the last couple of days in terms of the way that this has played out.
Yeah, that's what's interesting, right? And we know the president will say things and then he kind of backpedals or comes back, on different issues. But I do wonder how that can be, kind of just prevent executives from making decisions because they either don't want to pop up on the White House's radar or they're just not quite sure what ultimately sticks in terms of policy or oversight from the White House.
Oh, I think there's no question that makes it more difficult. I mean, certainly the tariff situation is a great example of that. Mm-hmm. Are they going to be on? Are they going to be off? Are there going to be refunds? And we're months and months into this debate, and knowing that this court case was coming. So I think that makes things difficult. I think longer term planning is clearly harder, but I think executives are finding a path forward and sort of picking and choosing their battles and trying to communicate with the White House to not just go out on TV and bash something that the president said, but to find, is there a place of common ground that we can work towards? And I think executives are doing a much better job at that than maybe they were 6 or 8 months ago.
We're talking with Mike Townsend, Managing Director of Legislative and Regulatory Affairs for Charles Schwab. He's in our Bloomberg Washington, D.C. bureau. Mike, though, when a CEO does speak out, and I think about what happened with the oil executives around the table at the White House and the Exxon CEO who talked about Venezuela being uninvestable and kind of the pushback. I guess this is stupid, naive, but here I go. Why aren't more CEOs speaking up? I mean, I think it was kind of shocking to see Jay Powell on a video pushing back. Who'd have thunk? But I do wonder, why are they so fearful of retribution from the White House?
Well, I think it just doesn't benefit, your company to necessarily be in the headlines for a couple days, and so I think that's what a lot of executives are thinking about.
But isn't there some honesty, right? Like I think about the Exxon CEO of being honest and saying,
yeah, Darren Woods said that on Friday at that roundtable that we broadcast.
Like if you're a shareholder in a publicly held company, you want your CEOs to be transparent and honest about something that could mean investing money in something that doesn't ultimately pay off, because it already hasn't. So I'm just trying to understand, that aspect of it.
Well, I do think the Venezuela situation in particular is a pretty unique one for the oil companies. They have a long history. They have lots of losses there. They have years and years of an unstable infrastructure and unstable environment. I'm not surprised that they're skeptical about the situation. And I think, particularly with Venezuela, I don't think there's too much disagreement that Maduro was a bad guy, that he had to go. The question is, what happens from here? What does it mean that we are running Venezuela? How long is that going to happen? Are we going to end up with troops on the ground? So I think there's just a lot of uncertainty there. And, I'm not surprised that some executives said, kind of hang on, let's wait and see how this plays out before I commit to anything, 4 days after this has all gone down. I do think you mentioned earlier the video from Fed Chair Jerome Powell. I thought that was pretty interesting, as you did, because he has taken all the provocations, all the name calling over the last really 12 months and just kind of let it roll off his back until now. And I thought that was pretty significant that he made that statement.
Mike, to that point, just in 30 seconds, the last 30 seconds we have with you, the markets have been letting all this roll off its back. Whether we're talking about the equity market or the bond market, we're seeing some losses in equities today and yesterday, but it's pretty minimal, I think, given what's happened over the last few days. Very briefly, when does this rhetoric start to affect the markets negatively?
Yeah, I think the markets looked at this Fed situation, seeing the widespread, different perspectives of commentary on the Hill about concern, and said, okay, maybe don't have to be too worried about this right now. Again, I think the markets, sort of like we were talking about with executives, are doing a better job at maybe not reacting to every little thing that comes out, and hopefully we'll continue to do that.
And hopefully we're going to come back to you soon, because we so enjoyed talking with you. Mike Townsend, Managing Director of Legislative and Regulatory Affairs over at Charles Schwab. Hey, by the way, tonight on Balance of Power, Republican Senator Tom Tillis joining Joe Matthew and team, so be sure to check that out. Still ahead, the playbook and battle for talent amid escalating salaries in women's soccer. One team owner Carolyn Tisch Blodgett is up next.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got stocks lower across the board. The Dow holding just above 49,000. The S&P 500 index just above 6,900. But the Dow, the S&P, NASDAQ, and the NASDAQ 100 index, they're all trading lower. S&P right now down 57. That is a drop of 0.8%. Dow Industrials down 0.4. NASDAQ 100 index down 1.5%, while the NASDAQ Composite Index is down 1.4%. On a down day for much of the market, the Russell 2000 index of small cap shares is up by 0.3%. The 10-year at 4.13%. Gold is surging $53 the ounce to $46.39. Spot gold up 1.2%. Silver, meanwhile, above $92 the ounce, trading at a record. Spot silver up 6.4%. West Texas Intermediate crude oil 62.06 a barrel. WTI up 1.5%. And Bitcoin now up by 3.6%. Bitcoin at 97,436. Delta CEO Ed Bastian says President Trump's push to cap credit card interest rates at 10% will hurt banks and lower-end consumers. He told Bloomberg Television, quote, the knock-on effects are pretty significant. Today we're looking at shares of Delta down 1.8%, but its credit card partner, American Express, lower by 0.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pelleton. Nat. is a Bloomberg Business Flash.
All right, we're already talking, we're already going because we're excited about this. I almost feel like we should just jump in. Let's do that. Bloomberg News sports reporter Vanessa Perdomo is with us. She joins us along with Carolyn, Tisch, Blodgett. She is governor and lead owner of Gotham FC, the football club, the National Women's Soccer League, NWSL team, and she's founder and CEO of Next 3 Ventures. It's an investment firm in sports, media, and entertainment. Welcome, welcome, welcome. I was going to start it off because, Vanessa, you and the sports crew, they put out a great story about like trends to watch in 2026, and one of it is kind of labor battles in women's sports, and talking about it getting messy, especially as you see escalating salaries and you see more stars leaving for Europe. So I kind of, Carolyn, want to start that with you. I mean, are you concerned about kind of losing players to European teams as we've seen salaries escalate? And welcome. and happy
diving right in.
That's how we roll.
Let's dive right in. So I'm a firm believer that rising tides lifts all boats. We are, if you think about where women's sports was when we came in as new owners 2 years ago, they were not being talked about on Bloomberg. They were not, no one was investing in it. And when we came in, 99% of investments in sports went to men's teams. And so you were starting to see that shift. We came in 2023. There have been several new owners that have come into the National Women's Soccer League that we're in, as well as the WNBA and others. So you're starting to see a real shift. And with that comes challenges, and you start to see, I don't think our league would be as successful as we have been if there weren't other leagues that were competing for talent.
So this is good.
So I think competition is good.
But are you afraid of losing some key players?
Yes, I mean, obviously there has been news of players leaving for Europe. Right. I think you'll continue to see that. You'll also see players coming back. I mean, Lindsey Horan, Lindsey Heaps just signed with Denver. We've had players go play in Europe and then come back. So part of it, I think, when you zoom in, I think it feels like, oh my God, the sky is falling. Everybody's leaving for Europe. If we pull back and say, this is actually we're competing for global talent in a global game. This is kind of the natural evolution of this.
So let me ask the question in a different way, and it's about a strategy for making sure those players don't leave. It's a strategy for keeping those players on your team. How do you do it without breaking the bank?
So that is something we talk about on a daily basis. Our general manager, Yael Averbuch-West, has put together an incredible roster over the last year. So we've won 2 championships in the last 3 years. And when we think about why would a player want to come, a question we ask ourselves daily is, why would a player who could play anywhere want to come play for Gotham? And part of that, I think what they have in Europe is obviously these brand legacies that it's hard to compete with. Chelsea's been around forever. If you want to go, if your dream has been to play for Chelsea, that's hard to compete with. What we have is, I think, some of the best coaching staff in the business. We've been very much at the forefront in terms of investing in medical. So we probably have arguably the best medical director in women's soccer, if not, women's sports today. We've invested in mental health. We've invested in a performance coach. So we're kind of investing in, if you're sitting here today as a player and you say, where can I get better? I would arguably say Gotham is the best place to go. And so we're really thinking about what is our competitive advantage and where can we compete, and let's go invest there.
Well, I think the interesting thing is, obviously, Gotham had made this really big effort to sign these huge stars. The U.S. Women's National Team, there was 4 or 5 stars. You have Jaden Shaw, who just came in last year, but Midge Purse, Emily Sonnet, Rose Lavelle, the NWSL 2025 MVP, for the championship game. You have these massive stars, and it felt like a concerted effort to do that, to make sure you have these big stars. And the league used to rely solely on the U.S. Women's National Team stars. Tell me about where that's gone. Why is it still important to the business to have stars like that? But how much it's grown over the last couple years?
So, I think it's a really good question. So I'm a big believer that stars drive viewership, and stars drive particularly a casual fandom. I built my career in marketing. I used to run marketing at Peloton, and that was really our model, was help these instructors turn into stars. That is something we've brought to Gotham, and we've taken not just the stars that we brought in, like a Rose and a Sonnet, but also helped someone like a Jalen Howell kind of find her voice and become more of a star.
Like Robin Arzon, I was thinking.
Robin Arzon, yes, Robin and I worked very closely together.
Killer,
right? But we helped her, and she's she really knows how to build her own brand, so I don't want to get any credit of that, but we helped these instructors really turn into household
But you guys
names.
appreciate it, certainly as part of the Peloton brand. Yeah.
Exactly, and that's what we're helping to do, I think, for a lot of our stars at Gotham. I think that really, again, that drives viewership. That brings the U.S. Women's National Team is an opportunity to bring a casual fan in. If you think about how many people watched the Olympics last year, the U.S. team win a gold medal, I think it was like 9 million people.
Yeah.
We have an opportunity at Gotham. 6 of those players played for Gotham at the time. We can help bring those people and bridge that gap from U.S. fandom to Gotham.
Nuts. I mean, 6 people is like amazing to have that kind of power. I mean, let's talk a little bit more about like the overall business of the NWSL. You had mentioned it before. You have new owners coming in, and one of them is a colleague from the NFL. Arthur Blank paid $165 million to bring an NWSL team to Atlanta. How big this business has got from 2019, from a $2 million expansion fee to $165 million. What's the next step? Like, how does that keep going, and how do you make sure that it doesn't plateau after such a big year?
Yeah, there's been so much news in the NWSL. We haven't even talked about the Blanks coming in. Yes, we're so happy that Arthur and his son Josh have joined us in the league. I think one of the real bright spots of the league, I think, is the boardroom and is the compilation of owners in this room. Yeah. You have owners like the Wilfs from the NFL, the Blanks now, and obviously our family. You have owners from the NBA, from MLS, from European League. So you really have which
means they believe in it. They believe in the NWSL product, right? These long-term sports owners.
You very much feel that. There is the conversations at the board are about how are we going to grow sustainably? How are we going to reach the next level, as you've asked. It is not about like, how can I make a quick dollar and turn around and sell it? This is a group of owners that want to be there and want to, invest in its future.
Like building out their portfolio in a big way.
And deeply care.
Yeah. You talk about investing in the future. Before we got going, I talked about growing up watching the Giants, seasons tickets my dad had, and we all kind of went to games. They've had some highs and lows. They need a new head coach. Any update? And I'm just curious, Jason Harbaugh, are you guys talking to him? John Harbaugh, sorry. Are you guys talking to him?
I definitely cannot be the one to break any news here. We did not time this interview with the coaching search, so nothing to say, but excited, obviously, for the Giants' future.
But there'll be a new coach soon.
Well, obviously there will be a coach. I just won't be naming who it is.
Do you have one?
I cannot. No.
Hey, listen.
I have nothing. I've just been in my office all day.
All right. It's John calling. No. Hey, just quickly, 20 seconds. You have invested in volleyball. You invested in Sail GP, which is something we've covered here. Anything else you're looking at for your portfolio? Just got about 20 seconds.
Oh, yes. Yes. Nothing to announce today, but we're continuing to look at emerging leagues, look at emerging sports. I think we're very focused on youth sports and who are the leagues that are really building up the kind of grassroots sports from the ground up.
Okay. Will you come and tell us when you've got a new coach?
Run right over.
Thank you, Vanessa. Also, Carolyn, thank you so much. Really appreciate it. Carolyn Tisch Blodgett, lead owner of Gotham Football Club, and of course our Vanessa Perdomo. She's Bloomberg News sports reporter. Thank you. If you missed any of it, check it out on our podcast feed.
You're listening to Bloomberg Businessweek Daily with Carol Massar and Tim Stenevec on Bloomberg Radio and Television.
All right, everybody, just coming up on the last hour of trading here on Bloomberg Businessweek Daily. I'm looking at equity markets. We're down across the board, most notably on the NASDAQ 100, down about 1.5% if you're looking at the biggest percentage decline. But we are off our worst levels, Tim, but we're also off our best levels of the session.
Yeah, if you look at what's moving in the S&P 500 today, energy is in the green, up more than 3%. Consumer staples up 1.2%, but consumer discretionary down more than 2%. Information technology down 2%. Communication services, Carol, down 0.7%.
Yeah, those higher oil prices are going to play into our next discussion. I'm Carol Massar along with Tim Stenevec. Let's get to some stocks on the move today. With us is Bloomberg News equities reporter Natalia Kniazhevich. Good to have you here. Tim just mentioned higher oil prices, and that's got a group of stocks moving today.
Exactly. So let's talk about petrochemical stocks. So one of them, LyondellBasell, the ticker is LYB. The stock is up by 6.6%. So this is all about the so-called oil to gas ratio. So all these petrochemical companies, they use, in the US, they use natural gas to produce their products. In Europe, they use oil or mostly oil in Europe or in Asia. So it means that natural gas prices are still at about the same level. Oil prices are moving up. It means that production costs for global producers are moving higher. Here in the US, they are still the same. And Bloomberg analysts are saying that potentially global petrochemical producers will have to increase prices for their products, which means higher margins for US petrochemical producers. And we also saw that Citigroup analysts removed downside catalysts for LyondellBasell. They also raised price target to $46 from $40.
Yeah, I'm seeing shares of APA up right now in the S&P 500 by more than 6%. ConocoPhillips up right now by 5.5%. Devon Energy up by close to 5%. Valero up by 4.4%. So a good day to be long those companies. But it's been a challenging couple of weeks.
Yeah, and Dow Chemical, right, is also one of the names that is definitely among an outperformer, I believe, in the S&P 500. So we've definitely seen those names, some outperformance there. And you understand fundamentally, at least for today.
And also, it's interesting when I look at positioning across different sectors, positioning across energy sectors are very low. It means that there is still more room for upside if investors want to increase exposure. So it's not excessively bullish.
Okay, that makes sense. Got to talk about also making sense, talking about banks, because they continue to report their numbers. Wells Fargo is on your radar.
Yeah, so Wells Fargo shares are down by almost 5% today. So
they're just getting hammered today, aren't they?
Exactly. Yes, such an interesting actually earnings season. So profit estimates missed because severance costs drove up expenses. The company is spending about $612 million on those costs. And CEO also said that he expects higher expenses in the fourth quarter because the bank continues to lower this cost base, and more job cuts are likely to come this year. Just to give you some numbers, guys. So at the end of September, the bank had almost 211,000 employees, and that number was just above 205,000 at the end of this year. So the bank is lowering the number of employees. And also, of course, everyone is watching how bank executives are reacting to Donald Trump's proposal to reduce that credit cap interest rate. And of course, Wells Fargo is saying that, yes, it is a concern for industry. It could potentially hurt consumers' access to bank credit.
There is a narrative around these big banks.
For sure.
And we're definitely seeing it play out. So we should all just jump on a ship and go cruising.
Yeah, let's take to the seas.
Let's take to the seas. Royal Caribbean is something that you've been watching today.
Yeah, so Royal Caribbean shares are also down by 5%. So today we've heard from a couple analysts. So one of them has actually put this company on its so-called short downside list. So they see some headwinds for the company. So for example, they say that demand is slowing down for cruise operators. And then we also heard that pricing is also an issue for some of them. And they also say that supply can be a challenge, and maybe there is some kind of oversupply in this area overall. And of course, today we've got news that the U.S. State Department kind of thinks about suspending visas, right, for multiple countries. And we saw shares of hotels, airlines, online travel operators are moving lower across the board.
I feel like these cruise guys have been on a tear, though, for a few years. And I feel like we've talked to a bunch of the CEOs or key executives, and they've been pretty upbeat and positive. But that's a very different tone.
Exactly. Just last year in December, everyone was so positive. Now we see that Delta Airlines also was not that great in terms of outlook. So
yeah, you do
travel
wonder.
sector is definitely something to watch.
All ahead of the World Cup.
Oh, yeah. That's
which
true.
I think is very notable because you have a
true.
lot of people who are supposed to come to the United States, and how are they going to actually get here? Not just the U.S., but North America. How are they going to get here?
When does that start? Summer?
This summer, June.
June, yeah.
Tickets are so expensive, I checked.
Oh.
Are they?
What's funny? My parents were like, what should we get, our grandkids for holidays? And I said, world Cup tickets would be cool. And then I found out how much they were. And I was like, actually, let's just go to a different soccer game.
Disneyland.
I'm not going to make you guys
watch
do
it together on
Yeah.
around the TV for a family. Natalia, thank you so much.